Hello, everyone. Hope you're doing well. There is something I heard before. People saying, greed is a nature of human mankind. So I think that totally holds true to today's market environment. So I was talking to some of my friends, and one of them actually said, she was talking to a financial planner or a financial planner approached to her earlier, and they claim that there's 86% return, you and try to really sell and get them the money for them to manage, right, and get the fees. You know how it goes. They all a lot of time they're commission basis. In finance, that's how poor we are. Unfortunately, that's how we make money out of other people, and we talk about millions of dollars in order to make a good fortune. Otherwise it's better off just to work to a truck driver or something, or even be an Amazon delivery for $15 an hour, or deliver food to from a restaurant, Uber Eat. So that's just why I'm while I'm enjoying doing all this stuff and share with my friends, I really like you to subscribe and follow me and push through it. If I get enough people and getting people to give me money to manage or listen to my advice and trust it, then maybe I can make some side money. I still need to get a job because, if you think about it, right, what you used to make, how much money you talk about for 1% commission that you're getting from people, you're talking about like you got to literally make, like 1 million US dollars for that person, or actually more than that, in order to get, how much I'm making for working for a company full time. So, and the analysis thing, funny enough, is actually even take longer than a full time job, 8 hours a day, because you have to pay attention to the market, you have to do research, you have to analyze, you have to put a slide together, put a presentation together, giving some recap, follow up with some other, investors or people you trusted that your advice, and and they may have something to ask you all the time for some one-off and ad hoc requests. So I enjoy doing what I'm doing right now, except like I said, I just unfortunately don't make money. So I hope I can get more fans and somehow get enough YouTubers, so at least YouTube will pay me. Anyway, back to the subject. So it's kind of difficult to believe 86%. A lot of people will not show you the overall portfolio. So people who study finance said diversification benefit, and which means you buy a lot of stock. But in a bullish market, and for you, which you're a small investor, you're not like Elon Musk or whatever, talking about $1 million, you only have, let's say, $5,000, or some people maybe even have only $1,000 on the pocket. Do you really need diversification? Can you even do diversification, right? So something that while the finance committee telling you, it may not really work for you, okay? Just bear that in mind, okay? And again, if you have finance question, I'll do my best to answer you. I don't think the questions that really need PhD to answer you. And sometimes PhD will go into too details, analysis, analytics with numbers, trying to drive us a mathematical answer, which stock market is a future, so who the heck knows, right? And there's a lot of factors, right? So if we do modeling, we do input, then we do output, right? And then we have a formula or something in between the calculus to come up with the output, right? To make a big picture, but really it doesn't. You don't really need to know that, and a lot of assumption built into that modeling too. So if the assumption is wrong, the whole calculation, the whole pricing would be all messed up. So sometimes that's not really what you need. And I have managed a lot of stock lately, so realize again that doesn't, when you have a lot of stock, it doesn't necessarily help pushing the return higher for investors, and it doesn't necessarily help because you have more time and more challenge and difficulty managing it. So my rule of thumb now is probably keep the 5 to 7 stock if I am helping people to invest. Mine actually 20 plus, so it gave me a lot of grief trying to managing it. At one point, if I had 35, and for diversification, 20 stock is the best. And also the 20 stock have to be in a different industry, supposedly. If you're buying the same industry, how much hatching you really talking about, right? So anyway, these maybe go beyond what you understand as a simple, basic investor, and it ain't matter because that's not really what I'm trying to tell you today for this video. So for those who watch Yahoo Finance Show, which you show you the sector return. You probably know in the average now, I mean, it was very bullish for all these sectors except retail and the utility. I think utility were a little bit behind. Energy kind of got caught up in the month of November, but it's kind of slide back a little bit in December, early December. These are based on energy prices, of course, which is Saudi have a lot to say to how to drive the teams, the supply. Um, and also they show you the simplest thing, which is the major indexes. So again, I can't dispute that because this is a true mathematical calculation from beginning of the year what the index at and now where we're at as of yet yesterday, kind of what I'm capturing. So for last step, you actually have 45% return around the range. Dow have 8% to 9% range. S&P has 17% range. So what that meant is if you buy the index fund ETF for those, put it there, you get that much percent of return if you let it sit still for a year. So when they talk about outperforming, underperforming, they're using your stock portfolio to compare with these index return. Just bear that in mind. So of course, I wouldn't think you use NASDAQ to compare 40 plus, so you may use S&P 17%, which means if you buy a stock, you should expect yourself to make 17% return or better this year, hopefully. But bear in mind, that is beginning of a year that you buy the stock. Not like yesterday you buy a stock and tomorrow, which is today, you think I need to have 17% return. I mean, most of people now having some weird mentality. I don't know what's going on because the market was so bullish that they really want to return so high. And historically, again, I mean, this is a very exceptional year, just how to bear that in mind. But to make a story for you short, I'm showing you this portfolio, which I given an advice to somebody else that, to put $10,000, which is slightly higher than 10,000, by the way, this way, just FYI. So you can reduce one share of stock to make that happen to be 10,000. But $10,000 roughly is what this person have, and here is a list of stock advice. And I want to go to the mentality, which is probably more important than this actual stock I'm showing you, how to drive the decision that I have to advise to buy these stock. Okay, so again, so the investment, what you have to do in an investment environment is you have to do your due diligence, right? So to do the due diligence, you have to do tools and resources. So maybe yourself, you go and look and analyze. You have to get a lot of resources like articles to read, right? Keep up the market, what's going on in the macro factors and the microeconomic factors of that industry. Specific study in that stock you're interested in to buy. So all these things takes time, and we call that due diligence. And you have two ways to analyze, which cover on my different video, is fundamental, which is how well the company performing balance sheet wise, is it healthy, and income statement, is this company making money, and the growth, they have some KPI analysis like price book, so how well price sales, I'm sorry, how well it is growing compared to this, compared to the sales of the price existing in the stock market of the point. Book value compared to book value, how much growth PE ratio, PAT ratio, and so on, right? All these stuff need to be put in place to drive decision making whether this stock is okay to buy rationally, okay? And of course, you can always argue that's luck, right? So you just throw a dice. Hey, this is the number. You go buy the stock go up 10% next day. Woohoo! And then also you have to look at target, right? I mean, this is what financial planner to do, which you may be too embarrassed to tell the financial planner a lot of time. What is your expected rate of return, right? So again, they will probably explain to you on average 15% to 20% a year, right? Consistently, but there was some good year and bad year wave the average out. So people are greedy, right? So technically 20% is not enough, especially if for small investor, which in this video probably more focused on small investor. I mean, $1,000, you get $200 returns. What the heck? And pay tax, everything deducted. How much money you really in the pocket? You can't even buy video games with that money. So that's not helpful. And scalability, which is probably not an issue there because you're not going to, for small investor or even for myself, I don't recommend buy that many stock. even though the diversification effect is well known in the finance community. The next thing is sustainability, which is really the key. Okay, so this year again is a very exceptional year and remarkable year. People really will make a lot of money. No matter what you're buying, dump money into when and how, you probably will still have positive return. If you have a negative return this year, then I probably conclude that stock is just not for you. don't, don't invest in stock market anymore. So so sustainable meaning if to next year, which a lot of people get a lot of question about next year whether stock will crash or not. So you have to think about that, and you can proceed in that manner. That will help definitely driving whether you have 20% return or not. So sustainability is really the hardest thing to do for investment. Just bear that in mind. Okay. Then the other thing is I am different than other investors, fund manager, portfolio manager. We talk about long term, long range, which could be 5 years, 10 years. I don't know whatever they meant, but opportunity cost, right? So opportunity cost is really big because I can drive a mathematical example, which I can do a video on next one, and kind of tell you, walk you through why opportunity cost matters, right? And so there's a start, and in reason understanding analysis, I advise my investors or friends, you have to ask yourself how much money you want to put, how many shares you want to buy. From that shares, you believe the stock is good or whatever I told them is good. They have to leave a base. What does that mean? Well, while you can buy and sell and make money off of the market, that base is something you don't want to touch. That is the reality of long-term investment, which probably mean when I said that, I mean 2 years or longer. Okay, you will hold that and then wait, because that's where people come into argument with me on short-term, long-term. Why should long-term? Don't touch it. Apple, look at return. Look at Amazon. Look at Zoom or whatever, right? And I agree, but if you have a pocket $100, do you want to put all them in and wait for long term, even though the market very bullish, and you don't sell because you say this just a good stock will go another 100% higher? Well, the reality, you don't know, right? If you and me know, we're not just fortune teller. We're really reality. We know we're like God, right? So it's not possible. So that's just why you have to bear that in mind, okay? And then so what was at the time, this was being advised is back in July timeline. So what were the stuff out there, right? Well, at the time, the few things outlined: vaccine availability, which is uncertainty at that time. We don't know because September by the time they tell you coming, and then you will be election will have it. You really don't believe it till now. You probably say yes, the government didn't lie to us, right? You will have it. Government stimulus at the time, the market seems to need some lift. The stimulus could be coming from Fed. In this case, Powell did an excellent job, like I said in the video. He really pushed what he could. The only question now is what is he doing with the money that left over, right? And also, what is the next year policy going to be, and how he's going to control the inflation and the devaluation of US dollars. The third piece is unemployment rate. At the time, unemployment rate in March was really skyrocketing to, I don't know, people say 14%, whatever, depending on how you calculate it. I say it will be roughly, if they do a rough scratch, it was 20 million people without a job. In July, maybe go down already, was still estimated to have 16 million at that time, 16, 17. And lately, I think right now with the recent numbers, we're estimating about 12, 13 million, 13, 14 million probably. If you take this percentage on employment rate, it will give you 12 million. But the problem is, I don't trust that number, because there's always difficult to statistically collect what really people are unemployed and the definition of unemployment, right? That people just give up, right? I don't give up yet, but I have applied for over 400 jobs and I don't get 5 phone calls. So a lot of people were saying the market was really terrible. Well, companies still laying more people off. well, there's no way to find jobs, right? Then nothing I can do. I would just go and file unemployment, file 3 jobs a week, and see what happened, right? And hopefully, 2021 things will turn around with vaccine going on, and and you will automatic, slowly economic recovery, and then at that time also looking at the economic health, how that shake up, right? So this is the concern at the time. And so at the time you will look at it and say, hey, what was something to buy, right? Then you will be, hey, biotech, which is really looking at whether it's vaccine available or not, thinking if a vaccine coming to play or not. Retail stock because it's get beating up because nobody going out to the store to buy things. And of course, there's some online there. And then third is travel and leisure. So which is trip, stock like trip or casino. When I think about leisure, I'm thinking about casino all the time. And then fourth is energy or some manufacturing company, right? So because of that mindset, right, in looking at this is where an area of discount going to be. So we kind of will focus on that and look and buy. This is how where the list coming from. Also, well, Tesla really hot at the time, so somehow I was still recommending the Tesla because there was some high volatility. It will go up and down. Well, as long as the volume, there's an ecosystem that people believe in Elon Musk, all these factors you put into play, and you will think the stock is not that yet. It will go up higher. At least the vision at the time and the mindset, which is hold true now. You're looking back into today, which is December 14, which is the price here. This is yesterday price, and assuming nothing got sold, and this is what you actually the return going to be in driving it. So again, this is back to around July. And you can see the stock apparently MGM, right? Casino, retail. This is biotech, which is actually unfortunately didn't work out. This is one actually have the loss. $20 now is only 11. Bowling was another one that helped me make a lot of money during pandemic in March or April timeline. I bought it and I made money over 3 weeks. And the stock will have 187 was kind of high because it was dropping to 150 at one point. But then with the news of Jet 737 come back into play, and also they airlines saying they will stop flying those and with vaccine also come into play, they're making more jet to really accommodating the future contract, right? The volume and capacity they're going to have. So the stock actually gone up, significantly. I think it was actually gone up to 240 at one point when that was over around 30, close to 31,000. And Apple apparently haven't moved much lately, but kind of today start to have some movement now at $125. Well, this is just bear in mind, this is a P split because at the time around July or early August, really, Apple and Tesla haven't split yet, so it gives you the price range of that. So the number one real winner at that case, in this case, is Tesla. Everybody probably recognize it, despite the, you heard a lot of strategists saying this stock is way overpriced. And in this retail stock, which I actually like what the products they make, they supporting few brand name, is really a good stock, and they actually recover much faster than I expected. So now they at 107% return, and this pretty much is going back to pre-pandemic prices already a year and a half, just FYI. And so does MGM was also gone back much faster than I expected. About a $20 or so, around 21, 22, but this one is almost close back to where they were at. You can check out yourself in the 1 year timeline. So at the moment where the price they're at, they may not be a discount anymore. So just bear in mind that please don't use this list and try to buy your stock today and tomorrow you may lose half of the value of what you pay for, because some of these is actually back to, I would say, normalizing that year already. If you go back to where business back in operations where they're at, they're pretty fairly prices on some of these, except CODX. I don't know why go back to 10, but they were actually gone up a lot from, I don't know, a few dollars. You know how biotech is. Like Modernic was now 150 some dollars, right? At one point, $175. So, and it was $68. I know I bought it at $1.68. I ended up selling it a little bit because there's no movement for 2 months, and then they want to have some cash flow issues. So anyway, I hope you like the video, but this have explained to you when, as an investor, if you want to buy stock, especially for future, what kind of mindset you need to have. It's not talking about today and current, but looking at what is going to be future, a year from now, 2 years from now, right? If you're not doing that, the other pieces, then you do look at the technical analysis, technical piece, and look at the range and how many V shape, the stock has, and then they dip down and 50-day average, 100 days average. What was the driver driving the stock going down and so on? Like SWI is one of the examples. They got hacked yesterday, so the stock down 70%. Today they're still down 7%. I bought some. I'm pretty sure that they will rebound back to $20. So, but again, it's a matter of time. I cannot promise you when it's gonna happen, but I'm pretty sure when the stock is working and operating the way and they're efficient and they're at a fair price value, news like that driving them going down, there's always news, right? So I call it noise. Eventually will rebound back to normal. So you want to take chances of the noise to make money. Zoom is a little bit harder to say because I know you really get really badly hit on that stock, but I actually think personally $250 is what I'm willing to pay for that stock. So you still have a long way to go to hit there, but when I hit 250, then I'll probably meaning there are a lot of bad news around Zoom. So then you may not buy at 250 anymore, right? So this stock may be, you have to look at, they either mergers, or they got bought out by another company. So then they were taking their existing customers and continue to expand. That way this stock will continue to go up. Otherwise, I mean, once it's back to normal, people don't use Zoom anymore, or I don't know the way how they write the contract. Maybe because the subscription is monthly basis rather than a year, so that's why they are in risk, right? And the market, again, the valuation as well. You look at Zoom, how many times they already gone up this year to determine whether they're overpriced or not. Okay, I hope you like the video. If you have any questions, you can send me an email and ask me. I hope you have a nice and wonderful day. Please remember, if you have not subscribed, please subscribe and follow and hit the bell for future notification when I uploaded this video. And I will continue monitoring a lot of investment stock that I've mentioned, so you have an idea. And I will be very honest. So this is the other way. I don't fudge. So if I lose money, I lose money. Come on, right? People need to know, right? I don't believe everybody, I mean, in the industry and all fund manager, everybody's saying they make so much. Are they really making that much? I don't know. But bear in mind though, they have a lot of tools to help them. I don't. I'm using one person doing all the analytics analysis based on the best available information I have. And while I'm doing this video, I cannot look at the stock market. So I have to do some trade-off sometimes, and I have to spend a lot of time after market closing to do a lot of study, analyzing, catch up. So just to let you know that that's maybe part of the thing why they're doing better than me too. Have a nice day.